Okay. Good afternoon, everyone, and welcome to QuickBooks 101. My name is Damon Watkins. I am the Director of Finance and Operations for the Cal Poly CIE. Today, we're going to be talking about the setup involved in getting QuickBooks Online up and running for your business. I'm going to start by stating out that I'm really going to walk this process through from the very beginning. So from installation all the way through to you starting to use QuickBooks to both invoice, bill your clients, receive payments, and at the end of the month, reconcile your books. Ideally, by the end of today's session, you should be able to do all those operations within QuickBooks at a pretty seamless level. The key aspects of QuickBooks is one of the key parts of QuickBooks, I should say, in the setup process is it is very important to get it set up correctly so that operationally, from a flow perspective, it will run effectively. QuickBooks is very much a system that if it's garbage in, it's going to be garbage out. And so taking the time to ensure that QuickBooks is set up correctly as it relates to your business is a lot of what I'm going to be walking through today. The basic procedure for the setup for QuickBooks that I'm going to walk you through today should cover pretty much any business out there, unless there's some specific tax requirements behind your business. With that said, after today's session, I have allocated some time at the end. If anyone has any questions or concerns, I can spend some time answering some of the as it relates specifically to your business. With this said, we do use this session as a stepping stone to really setting up consulting sessions with the specific business as it relates to your business specifically. So if after this session you still would like some more consulting, as long as you're an SBDC client, you can go ahead and set up a meeting with me. I can go ahead and review your business profile and we can see what the next steps to getting QuickBooks set up and utilizing it as it relates to your business. With that said, let me tell you about what QuickBooks can do for you and how I've worked with QuickBooks in the past before we actually dive into it. So I have been working consulting for QuickBooks for about 25 years right now. I've worked at very, very large companies. The last company I was at, REC Solar, I ran a $250 million budget out of QuickBooks for almost 3 years before we transitioned to a new system. The reason I like to emphasize this is the scalability of QuickBooks within that. If it's set up correctly and run correctly, it will scale to pretty much any size that your business needs. Key aspects, again, go back to how we set up QuickBooks, how QuickBooks is managed, and more importantly, the reconciling of QuickBooks at the end of the month. With that said, this session only works with your interaction. Please, if you have questions, you have concerns as I go through this, please raise your hand and let's address the question at hand. This session is very much about getting an understanding of how QuickBooks works for you and what it requires from you to operate correctly. And so again, I would prefer that this be an interactive session and not you guys just sitting here listening to me talk about QuickBooks. So don't hesitate to raise your hand at any time. The other part about it is any of the material that I go through with you today, you don't need to take any notes. I will be sending out the study guide that goes along with this session that we do today that walks you through every step of what I talk about today so that you can just focus on the actual session itself and what it takes to get QuickBooks set up. With that said, again, understand that as I go through things like the chart of accounts, they will become very specific to your needs within your company. And as such, if you have specific questions related to that, please let me know. The one subject that I try stay away from today, and the only subject that I try stay away from today too much, is taxes. So just to be clear, I do a beginner's class, which is this QuickBooks 101. I do an intermediate class, and then I do an advanced class that handles tax and tax reporting. Tends to be towards the end of the year. But taxes as it relates to your business are very specific, and I try not to go too far down a rabbit hole as it relates. With that said, I have allocated time at the end that if you have specific questions, I can certainly attempt to answer them, given the knowledge that I have relating to your business. With that said, let's talk about QuickBooks before I actually take you inside QuickBooks and into the study guide. So QuickBooks Online and QuickBooks Desktop are two of the primary products that I teach lessons on and consult on. QuickBooks is actually doing away with the desktop version. Unfortunately, I'm way more a bigger fan of the desktop version than I am the online version, only because the online version in many ways is a slimmed down version of the desktop version and doesn't have some of the customizations that I actually prefer are available in the desktop version. With that said, QuickBooks Online is a robust online accounting system that can be tracked from your computer, your phone, your iPad. And so it makes it super convenient for individuals who are running a small business and need a CRP QuickBooks is the ideal candidate to go ahead and get that set up. Before I actually dive into the QuickBooks side of things and actually start showing you how to set it up, entering your tax identification number and your relevant business information, there are a couple of small things that we want to make sure are taking place before we go in there. So a couple of things to keep in mind. If you are operating a business in a city, you do need to get a business license in that city. If you're working in SLO, you need to go down to City Hall and get a business license. If you are incorporated, i.e. you're an LLC or a C Corp, you do need to register with the Secretary of State to get your tax ID number generated with the Secretary of State. This is irrespective of where you are incorporated. A number of businesses are incorporated out of state because they don't want to deal with the California income tax, Delaware, et cetera, et cetera. It does not mean you're exempt from being registered in the state. You still have to register with the Secretary of State to do business in this state as a whole. Those two requirements are the primary requirements before we go into QuickBooks to get everything set up to ensure that QuickBooks is accruing and tracking at those levels for you. Now, I know I talked about not touching on taxes, but one of the areas that I do highlight here is part of what we're going to walk through from a customization standpoint is the ability that QuickBooks has to create tax accruals as it relates to your billing and invoicing from your clients. The key aspects of this is, again, that they're set up correctly. Each state, each county, each city has different tax rates that make up the tax rate in your area. And as such, you actually have to set them up in QuickBooks correctly to track those tax accruals. This is where my comment earlier about how taxes relate to your business specifically can be very different. Services traditionally are not a non-taxable expense. Anything associated with materials or a product are. And so again, ensuring that you have the ability to have them set up correctly in QuickBooks is the key aspect. With that said, let's jump right into QuickBooks. Okay, so the very first thing I'm going to start off with is the account settings within QuickBooks. This is the main page that we get to when we initially log into QuickBooks. This is my demo account that I'm going to be showing you today. But the idea behind it is once you've actually logged in and purchased the subscription, this is the page that it brings you to. Share screen?
Yes, please.
Gotcha. That would help if I actually show you what I'm seeing. Okay, let's try that again. Okay, so now that you can actually see what I'm seeing, so what we have in front of you is the initial login page for QuickBooks Online. So this is known as the dashboard. It's the very first place that the system takes you to when you initially log into the system. From this page, you can pretty much customize anything that you want to be shown on the dashboard. So as an example, if I scroll down here, I could set up my bank account links. I could show outstanding invoice, cash flow. I could even have a planner showing my schedule for the day and the things that I need to work on. The nice thing about the dashboard is you're able to customize it to your needs. So if you want to see something specific on here, you can have the system customize it. An example at hand was I jumped in here and right away I have a task showing me that there's an overdue bill, right? You could also have your accounts receivable or your accounts payable mapped to the front page so that it could show you your cash projections for the week moving forward and in turn the liabilities that you will have to pay as you move forward for that week. In many ways, QuickBooks does a fantastic job of projecting or telling you exactly where your cash flow is. The key aspects of it is making sure that it's set up correctly to be able to do this. So let's dive into this setup. So we start up QuickBooks for the first time and we get to our dashboard. The very first thing we want to make sure we do is to go into our account settings and make sure that it's structured and set up correctly. Excuse me. So I'm just going to walk everyone through really quickly what the basic setup looks like in QuickBooks. Any questions so far? No? Okay. So simple things like company name, legal name should be listed in here. If you're a DBA, you're going to want to list it as a DBA in here as well and set it up under the DBA account. The company type and tax form is going to be listed down here. So if you're an LLC, sole prop, C Corp, etc., it's going to be broken out down here. Company address, these things are important that you list them on there. They actually will show up on the invoices when you send them out to your clients. So making sure you have the relevant information and that it is set up correctly. Usage. Now, traditionally, the system has the ability to have up to 5 users on one account. This can be ideal for companies that have departments within their business and want to have more than one individual working within QuickBooks. So if you're a bit of a larger mid-market company, you might have someone in accounts receivable that is sending out invoices to your clients, and you might have someone in accounts payable who is managing paying all your bills. You could segregate those duties out and structure those positions to only have access to those areas within QuickBooks. This is really nice if you're managing a department and you don't want to give certain access to your financial records to certain individuals within your company. You have the ability to control what they have access to. This includes reviewing things like chart of accounts, financial activity, and bank registers as well. I'm not going to go too far into sales because, again, it's very specific to the business at hand, but you do have the ability within QuickBooks to set up very specific templates associated with your business. So if you have a company logo that you want on your invoice, if you have specific verbiage that you would like on it when it goes out, this is the area where you're actually able to set it up, customize it to your need. You're also able to go into the template section within QuickBooks, which I will show you a little later on, and build out specific templates associated with things like sales receipt, bill receipts, and invoices. The expense side of the world. So the system does an amazing job of tracking most expenses up there. I'm going to spend a bit of time going into the chart of accounts, which is the primary area where we track the expenses associated with the business. The chart of accounts is basically an itemized list of all associated income and expenses and liabilities associated with the business at hand, and is tracked at that level through QuickBooks. Initially, the chart of accounts can be rather large in QuickBooks. One of the first things I will actually show you how to do is how to condense the chart of accounts. The default chart of accounts is 250 line items long, which is about 210 more than you need when you're initially starting up QuickBooks. Bring on, we have a question.
Set it down. Is there a danger of calling a category or a chart miscellaneous and lumping in everything you just don't know what to do with?
Yes, there is, and we're going to get there, and we're going to make sure that we don't do that. And because yes, so part of the issues that we have in QuickBooks within the chart accounts is because a lot of people don't always have an understanding of how the chart of accounts relates to their business. We have a bad habit of dropping things into miscellaneous unknown, and then we get to the end of the year, we run a profit and loss, and we're like, whoa, why is everything sitting in miscellaneous? Now, the problem with throwing everything in miscellaneous is we can't category code them to where they should be. So a lot of what I will actually spend doing today is teaching you how to categorize coding specific expense transactions. And the reason for this in particular, and I don't want to go too far because I actually want to show you this, is these days we don't traditionally operate like we do as a business 10 years ago. Well, what do you mean by that, Damon? Well, what I mean by that is traditionally 10 years ago, I would get a bill in the mail from a vendor. I would plug that bill into the system, and then I would cut a check against it. Well, guess what we don't do anymore? We don't get bills in the mail, and we don't cut checks. And so most of the time, what we're doing is facilitating payments directly out of QuickBooks that hit our bank and then show up in QuickBooks as an expense. And we do not have a bill to make the association with, and nor do we want to be quite honest. Why would we want to take the time to enter a specific bill when we could simply category code that? Well, what does it mean? Well, let's say it's your electric bill, right? We would set up a line item within the chart of accounts that when that expense hits, we would just charge it to utilities. Now, do we care that it was PG&E that would show? No, we don't. We just care that it was utilities, because at the end of the year, when we run that chart of accounts and see everything that we've expensed to plan for next year's budget, we'll have the total accrual against the utility to be able to track it against. And so business has changed in that regard in the way that we interact with QuickBooks and how we track these expenses. The payment system, pretty straightforward. This is one area that I will spend quite a bit of time. I use this term called one source of truth. So one of the areas that's a very big pain point for individuals business-wise these days is all the different payment systems that we have access to. One of the very first thing people like to do in here is they want to connect their bank accounts, which QuickBooks does seamlessly, but then they want to hook up all these other third-party apps, Square, Venmo, et cetera, to QuickBooks directly. Don't do it. And there's a very, 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 very specific reason that I will get to a little later on that you don't want to do it. And it actually has to come down with reconciling QuickBooks and ensuring that you can tie your QuickBooks out. The problem with having these multiple entities automatically linked up is you start to generate duplicate entries within QuickBooks. And then when you go back to reconcile at the end of the month, you have a huge amount more entries in there than you should. And so one of the best practices that I've come up with, and I will walk you through it when we go through the actual connecting all of the bank accounts to QuickBooks, is a process of using one source of truth. And the one source of truth should always be your business checking account, right? Every transaction that we have should take place through the business and checking account first and foremost. Because no matter what hits that account, it will show up in QuickBooks the next day. It doesn't matter what the transaction is. If it's connected to QuickBooks, it will show up. So if there's a Venmo payment that hit the bank, the next day it'll be in QuickBooks and you can just category code it or wash it against an invoice. So it's simple little things like this that can save you time and effort as you're utilizing QuickBooks. Now, to be quite honest with you, if it's set up correctly and you're running a small business, you should not have to spend huge amount of time each week in QuickBooks reviewing, issuing out invoices and receiving payments. In my opinion, it should take no more than an hour and a half a day on average if it is set up correctly. The key aspect is doing the due diligence and following those three aspects, ensuring that you're reconciling with your bank, ensuring that you're always tagging your transactions coming in, and then most importantly, reviewing and ensuring that all transactions tie directly back to the bank. Through a whole lot at you, I promise you, I will walk you through everything I just said in a little bit more detail. The last part I just wanted to touch on here at a really, really high level is the independent contractor portion of QuickBooks. So this tends to be an area of difficulty at the best of times, but one of the key aspects that QuickBooks does have is it is able to track independent contractors. So at the end of the year, you can issue out 1099s from your perspective. Really, really important when it comes to dealing with independent contractors, as if you don't have that W-9 on file and they're not registered, that tax liability resides with you. So if you don't issue out that 1099 out by January 30, the liability associated with whatever work was done can fall back on you as the owner of the business. Please keep that in mind. Do we have a chat? Okay, with that said, we got part cleared on the accounts and setting, pretty straightforward, to be quite honest with you. The next area we're going to jump into is what I started talking about initially, that big word called chart of accounts. And to be quite honest with you, this is the area in QuickBooks that you're going to become most familiar with in the quickest manner. Because really, this is a concise summary of pretty much everything that's taking place with your business at this point in time. And it's broken out on a register level. So from this page, I'm able to track everything from what's cash on hand, what do I have at the bank, what's in accounts receivable, what do I have in inventory, what loans do I have, what liability do I have, what equity I have. And as I started explaining at the beginning of this, this tends to be a rather long list. And so of the 250 line items, got 75, yep, 250, you're not going to use about 210 of these. So actually the very first thing I'd like you to do is go through this list and not delete, but deactivate the ones that you won't use. Now, here's the thing about the chart of accounts, and there's one golden rule that we have with the chart of accounts. We never ever delete out of the chart of accounts, and here's why. Any information that's entered will hit the chart of accounts and be stored there. If we deactivate or make inactive a line item, the information will remain in the system and it will be accessible. If we delete or edit a line item out, we actually will physically remove the line item. And this ties back to when we reconcile with our bank at the end of the month. And if you're deleting items out of your chart of accounts, you will never be able to tie directly back to your bank and reconcile your books. So first exercise, once we've got QuickBooks up and running, is to go through your chart of accounts and condense it down to only the items that you need to use for your business, okay? And so you're going to find quite a few things in here under so many different categories that simply do not relate to you. Let's take a look at this one right here. California Department of Tax Fee and Payable Administration, Global Tax Payable. Well, unless you're an international company, there should be no scenario where you're actually using this line item. We're simply going to go into the register, make it inactive, and next time we see it, we won't see it in the register at all. So that's interesting. So the key aspect here is go through and condense your chart of accounts so that when you're working in here, you're not scrolling through lists and lists and lists of things that have nothing to do with your business. Take the time and do this exercise because it will be so much more productive for you if you can condense your chart of accounts down from 250 line items to 40 line items that you're simply working on. The other part is as you start to need those line items within your chart, then you can start going back in and either reactivate them or starting to build customized chart of accounts line items to track against. So one of my jobs here is working with our summer accelerators. We have 8 teams that come into the hothouse that given money and basically have 8 to 12 weeks to come up with a business. And so I actually teach them how to use QuickBooks to facilitate doing that. But one of the key areas with them that I encounter, and it relates to everyone here, is they want to track at specific line items within their chart of accounts. So as an example, they may specifically want to track product development. Or you may want to specifically track a specific line item within your chart of accounts. This is where you have the ability to do that. Now, whether it's on the sales side or the expense side, you can customize it towards your needs. And at this point in time, I'm actually going to show you how we would do that. So let's say, as an example, I have this nice long list here in my chart of accounts associated with the business, but I really want to have a line item that tracks just my product development. How much money am I spending on building this product for my business? It's simply a matter of going in and establishing a new chart of accounts within the system. At the highest level, the system is actually going to prompt you for what are we actually talking about here? Are we talking about an income account? Are we talking an expense account? Are we talking a bank account? Is this a fixed asset that we need to amortize? Is it a credit card? Is this a long-term liability? Or is this equity? Now, I'm not going to sit here and explain all of these terms for you. I'm hoping that everyone has a general understanding of what they mean and how they relate to the business. But in most cases, we're dealing with an expense in my case, when we're talking about right now. An expense in this case associated with producing a product and or a service with a business that we want to track exactly. So when I see that expense coming in from the bank, I'm able to tag to this line item and know exactly how much I'm spending on my product development. This actually ties directly back to having a budget within QuickBooks. You can preload your budget into QuickBooks and on a monthly basis run your budget versus actuals against these specific line items. You also have the ability to build your budget out along the lines of the chart accounts to track directly against it. Now, a budget is a roadmap to success. That's kind of like the bumpers on a bowling alley, as I like to say, right? We know where we want to go and we know what we want to do, but we don't always know the path that we need to go along to be successful. That's what a budget and a business plan does for your business as a whole. Having a budget in the system that you can actually track against is one of the most important areas. But to even get to a point where you can have a budget, you need to know what you're spending money on. And so that's why it's so important that we set up the chart of accounts with the necessary items that you need to be able to track those expenses. So in this case, I want to be able to track a specific expense. And in this case, we're going to call it labor. I'm using an independent contractor to do work for me, but this specific individual is working on product development. Oops, if I could spell. So we give this the name to the product, and then we give it a description name, and then we scroll down to the bottom and we save it. And all of a sudden, we're going to now see within the chart of accounts get down to the product development. No, it's done by category, which is what's making it a little easier in my terrible eyes to see. Actually, I should just run the filter. So I just want to point out, this is exactly why we condense our chart of accounts so we don't do this. Because otherwise we're sitting here scrolling through. Let's see if I can find the product development. No, the desktop feature has the search, but this one doesn't. Let's see. Owner, state, personal. I swear it's in here. I just put it in. Payroll, expense, payroll, entertainment. Just to be clear, while I'm scrolling through trying to find the line item that I just created, you can see how many levels that the system goes into that simply don't always relate to what we're talking about. Why on earth? It has to be under the expense category. Maybe it didn't save. Ah, there you go, smarty pants. Because I know I got the 250, so we should be going. Product development, there we go. So now we can track that specific line item. In this case, it's against labor, but we could set it up to be an expense against a product that we brought in, or research, or whatever's associated with it. But the key aspect that I'm trying to get across here is that we can build very specific line items to track against very specific expenses that would then roll up into our profit and loss report from a financial reporting perspective. Again, I think the exercise that we just went through highlights the fact that you are going to want to take the time to go through the chart of accounts and condense it down to something that's manageable for you, so you're not scrolling through pages and pages like I had to do. Also understand that the chart of accounts directly plays a part in the overall financial tracking of your business, so you do not want to create duplicate entries in here, right? I do find a lot of the time people start creating accounts and sub-accounts. So that's the other part about the chart of accounts, is you do have the ability to create sub-accounts. So just like we have the products and development here that I set up, hopefully still there, right? I could create a sub account of that would feed into it. Let's say I was dealing with a specific vendor that I wanted to track against, or a specific sector or department within the business. I could create a sub account of that to track those expenses against that would then feed into product development. I could have multiple businesses out there that I'm working with that could all feed into the same line item, but we could break them out at a granular detail. So the question at hand with the chart of accounts a lot of the time is really about how much granular detail you want to have within the chart of accounts to dig down. I tend to say start at a higher level first, and as the need comes up, you can start to dig further and further down. Don't dig in too far first, because then what you end up happening, and I have this all the time, I have people come in who have 1,000 line items in their chart of accounts. They've set up every state in the country, even though they only work in 3. And they've got all these line items to it, and it's like, that's great, but now you have to scroll through 37 pages before you find that line item that's reflective of it. Keep it condensed, keep it really focused. As your business grows and the needs to track specific line items, you'll go into the system and either unhide the ones that you need or create the line items within the chart of accounts as a whole. Is everyone clear on that? So the other one that shows up on here, and I don't have it now because I'm not actually linked up, is the bank side of things. So your bank account will actually show on here on the very first page. Actually, go back and show you right beneath your cash on hand. So traditionally, your bank account would be set up right beneath this cash on hand here. And the nice part about QuickBooks when it comes to tracking those expenses, and this is where I'm actually spending a little bit of time talking about how we interact with the bank and what that looks like in regards to managing the expenses and tracking the expenses as they come in. So in many ways, the interaction between the bank and QuickBooks is the primary method of communication and capturing of both income and expenses. This is why I mentioned, and actually I'm going to jump on the board, if you don't mind, the camera can see me. So I'm going to show you the complicated way that most people like to start off with QuickBooks, and then the simplest way to resolve the issue at hand. Can you see the board okay?
A little bit of a glare, but for the most part.
Okay, so we talked about the bank being the one source of truth for QuickBooks, meaning all financial transactions that hit the bank map over into QuickBooks overnight, right? And one of the things we don't want to do is have all these other third-party products set up. Now, if you're utilizing QuickBooks in this way and it works for you, great. But here's what the issue that we run into when we utilize QuickBooks in this manner. And I'm just going to use Square and Venmo as an example. So we have a client that makes a payment to us from QuickBooks. That money hits the bank account, right? The next day we come in and that transaction is lying in QuickBooks under banking. And we got a $500 payment from our client. Right? Now we have an invoice out there that we can simply go ahead and wash that payment against, right? So the system sees the 500, it's going to say, I see you have 13 invoices. Tell me the invoice that ties back to this. It's actually going to look at this $500. You know what? You have 3 invoices for $500. Which one is it? We just tag the payment to the invoice and it washes it. That's great. That works. And it works for all transactions. As simple as that. It hits the bank, It goes to QuickBooks. The nice part about this is at the end of the month, we punch in a date and we punch in a dollar amount, let's say 23,000. And when we go to reconcile with QuickBooks, QuickBooks ties that directly. And if it doesn't, it means that we missed something. Okay. And so it's a great way to stay on top of both your bank account and your QuickBooks and tie back to it. Now, why would there be a delta there? We may have missed a payment might not have cleared, but the one that I encounter the most with this scenario is the fees that are charged by these credit card processors. And this is something that's pretty common when it occurs. So you send out an invoice for $100, you get a $95 payment coming back because there's this credit card fee associated with or processing fee. Now, the thing about it is that $5 is actually an expense to the business. But how do we capture that expense? Well, traditionally, we would have to go into that invoice, create another line item, and reduce it by those $5 to bring it down to that $4.95. Well, if you're sending out 20 to 30 invoices a day, it's not very realistic to do every time a payment comes in, right? So one of the ways we're able to offset this is to create these credit card processors as vendors in the system, right? By creating them as vendors in the system, what we can simply do at the end of the month is go in and pull their statement and see what Venmo charged us for that entire month and enter that bill. And then wash that bill out, right? Thus capturing the expense associated with those processing, okay? So that's one of the primary reasons that I like to use QuickBooks directly linked to the bank and not a third-party app. Here's what tends to happen if we link Venmo and Square up to QuickBooks at the same time. The bank sends the information over, we wash it out against the invoice, and then you come in the next day, and that transaction's back in there again because Venmo sent it over as well. Now we have duplicate entries in there that are consistently showing because the information is being transmitted to here and it's being transmitted to here. Now, this is why I recommend that we use this method. This does not mean that's the only method we can use, but it is the simplest and most effective method to stay on top of your QuickBooks from a reporting perspective and to ensure that it always ties directly back to the bank. With that said, if you utilize this method, you should always tie it at the end of the month, and your balance should always match exactly what it is at the bank, right? Unless something changes within that. And it's pretty easy for you to see that. And it's a much better way for you to stay up on your financial activity as it's associated with your business. So that's the primary reason that I recommend we use the bank as the one source of truth as it relates to the cash flow scenario and the reconciling of QuickBooks as a whole. Does that make sense to everybody? Okay, moving on. Next line item that shows up is AR, accounts receivable. Let's talk a little bit about what AR means to everyone else in this world. So AR is actually the lifeblood of your business, right? Without money coming in, you can't provide services, you can't provide products, you can't work with your customers, you can't get anything done. Now, having worked for large entities and utilized QuickBooks, one of my primary focuses was always managing cash flow. And let's be honest, one of the primary reasons for utilizing QuickBooks is to have a clear understanding of what your cash flow looks like, what it's going to look back like in the future, and how can I take that money and put it back into my business. And so a lot of what I walk you through QuickBooks is actually to get you to that point where you can generate financial forecasting, you can have the budget in the system, you do have the ability to track budget versus actuals. Now, how can QuickBooks actually do that? Well, there's a number of different ways that you can utilize QuickBooks to manage your cash flow. Area is going to be AR and AP, so accounts receivable, money coming in, accounts payable, money going out. And then the same interactions happen with both your customer and your vendor, okay? And it's actually these two interactions that have the biggest influence on your cash flow. And the lifeblood of small businesses at these early stages is cash flow. In the first 3 years of business, the primary reason businesses shut down, cash flow, right? And so this is an area where we can really leverage QuickBooks. So let me walk you through scenarios and give you some examples before I actually dive in and explain it in a little bit more detail. Please stop me anywhere along the way if you have questions in regards to this. So AR, money coming in, AP, money going out. Traditionally speaking, from a director of finance perspective, I'm coming in every morning and I'm running every Monday morning, and I'm running the AR and AP. Now, here's the cool part about QuickBooks. You can actually automate these reports, right? So if every Monday morning you want to come into the office, you can actually go into the reporting manager and tell it to show you for the next week, how much money am I supposed to receive in? Conversely speaking, you can also have it run you an AP report, how much money is going out. Why is this important? Well, let's take a look at AR. If I come in on Monday morning and I run my AR and I know that this week, I'm going to get in $15,000 from outstanding invoices that I need to collect on. I'm then going into my AP and I'm running my AP and I realize, ooh, I've got to pay $22,000, right? I have a negative cash flow scenario for this week. How do I manage that? Now I'm reaching out to my clients, my vendors, trying to facilitate. But it's these simple tools that enable us to manage the cash flow scenario as we move forward. If we know exactly what's coming in, then we know exactly what needs and can go out. And so it's these kind of things that will help you manage your cash flow on a week-to-week basis and in turn on a monthly basis from an overall perspective. Now, the biggest part that influences this and the part that people sometimes don't quite wrap their minds around is one of the ways you can utilize this to manage cash flow is through terms. So let me give you a great example here. So let's say we are a construction company, because it's something I have some experience with, and I'm building something and I have no credit history because I'm a relatively new business. And so I go to buy lumber from this vendor, and the vendor says to me, well, you're not a legit business, you don't have any credit history, so it's cash on hand. So I'm buying that wood, I'm paying for it, I'm creating the liability there, and then I'm going back and I'm building what I want to build or putting it together, and 30 days later it's done, and then I'm billing the customer. Well, that 30 days in between, who's held the liability associated with your business? You have, and you're out that cash per se. So one of the primary areas that I tell customers to focus on at the beginning to help them through and manage the cash flow is to work on improving your terms with your vendors. And here's the thing. People are actually scared to interact and ask for terms your vendors. Don't. You're paying them for a service. They want you as a customer. As long as you're a good paying customer, you can generate terms with a vendor within 90 days, right? So as an example, after 3 months of working with this particular lumber company, they turn around and go, you know what, you've been a fantastic customer to work with. We're going to give you 90-day net terms. Love it. So now I'm buying the product. I don't have to pay for it for 90 days. I'm able to deliver it to the customer in 30 days, thus creating a positive cash flow scenario. It's these kinds of small things that you can utilize QuickBooks for to help manage your cash flow, especially when it comes to project-related businesses and or businesses that are cyclical in nature, so that you can plan out when you'll need those funds on hand and where they can be allocated. It is vital to small businesses to really wrap their arms around dealing with both the credit side as a business and the cash flow side of things as it relates to both the customers and the vendors that you work with. Okay, really simple concept, but plays a huge part in how businesses are run these days and the survivability of business from a cash flow perspective. The other part about this is as we go through these exercises of doing these things, we are generating financial reporting that at a later date, should you want to go get things like outside investment, a loan from a bank, an SBA loan, all the information is right there. The very first thing they're going to want to see when you go out and get a loan, they're going to see a P&L. And if we're doing everything that we've talked about, you're going to have a P&L that will clearly reflect exactly where your business is at today. And so it's really, really important that you come to terms with what that means as it relates to your business from a cash flow. I keep emphasizing the cash flow as it's the biggest driver of small business and the biggest hurdle they have to overcome, especially within the 1 to 3 years, basically. Any questions around that?
How do you get a cash flow report?
Sure. So your general cash flow report is the AR and AP coming in, right? So from a cash flow scenario, what you receive in as income is always going to be your accounts receivable, what you're billing your client for, right? So you can generate the AR side of the cash flow from there, and then you can project it out based on either the project. So in your case, you're cleaning solar panels. You know that you have this client that you clean their panels twice a month at that set location, and you know how much you're billing them for, and you know what your overhead is. And so you can actually create a model that will track that out. Now, the trickier part on this is each each customer that I'm guessing you're dealing with is going to be slightly different.
Mhm.
But from there, the system will actually, if you have those clients all set up in there and you have the billings, the system will generate a report for you that will project it all out. It's simply a matter of you then taking it and projecting out further than you want it to go. So if you have a client that you have a contract with for 2 years, that system's already going to know what that cash flow model looks like for them because it understands the billing cycle. The only thing that you need to account for is the COGS, the cost of goods is sold, or anything associated with doing that specific task or service. Does that make sense?
I was just wondering, is there a report that's called cash flow
No.
report?
No.
Okay.
No, because cash flow in and of itself is an interaction between income, payable, and receivable, right? And so really what we're looking at is how much do we have at the bank, how much is coming in, and how much is coming out. And so there's 3 different reports that will give you just that. So it's going to be your accounts receivable, your accounts payable, and then cash on hand.
Okay.
And so between those 3, it tell you exactly what we're talking about. Want to be clear about cash on hand. There tends to be some confusion around cash on hand. It is exactly what it says. It's physical cash that you have on hand. I have a client walk in who wants to rent my space and doesn't have a credit card and they hand me cash. That's cash on hand. Okay. There's a lot of a belief that it's also tied back to the bank account. It's not in any way tied to that. It's physical cash on hand, which again, if you don't have, why don't you go ahead and deactivate it to not create any confusion within the system. We spend a lot of time in chart of accounts on a really high level to make people feel comfortable with what takes place here. I'm going to pivot a little bit and talk about the expense side and then the customer side, because I really want to bring both worlds together. So on the expense side of things within QuickBooks, primarily we're talking about vendors and contractors, right? And the reason I want to spend a bit of time here is anything that goes through the vendor side of things relates to individuals that you are purchasing something from or are working for you as an independent contractor, right? And so the steps to going ahead and establishing these new vendors in here is really, really simple. Simply a matter of clicking on the new vendor, going through, completing the relevant information. Now, Damon, do I have to complete every single line item in here? No, you do not. Primarily a company name, a contact point, an email, and a phone number is sufficient enough these days to facilitate the work that you want to do. Key areas that you do want to pay attention into here. Now, I'm a big believer in going paperless. I don't like paper at all. Okay. File cabinets haunt me. And so one of the things that QuickBooks does a great job is from a security perspective and a paperless perspective, it will store the information for you on file. Why is that important? Well, when you deal with a vendor or someone as an independent contractor, we should be getting a W-9 on file for them. Okay. And there's actually a section down here, right, from a tax perspective where we can both upload, here's my little, move it on me. Where is it? But the area I want to pay most attention to is this section right here that we talked about earlier, right? So if you are working with independent contractors, the responsible and the tax liability on anything that you pay them is on them. The key aspect to making sure that takes place is when you set the vendor up that you are checking the box associated with tracking 1099 payments. This is important because by January 30th of the following year, we need to issue out those 1099s to those independent contractors to ensure the fact that they file and do their reporting on their side. Now, the 1099 comes in a 3-copy, and the reason for that is 1 copy goes to you, 1 person goes to the independent contractor, and the IRS receives the 3rd copy. So they know how much you've paid them, and in turn are expecting him to complete a return associated with that. That is the one key area in here that I really wanted people to just feel comfortable going in and completing. The other part is you also have the ability in here to set up direct payments to your vendors. So if you wish to pay them via ACH, you do have the ability to add that checking account and banking information in here so that you can facilitate directly paying those customers out. Lastly, but not leastly, those W-9s that we just talked about that you don't want to put into a filing cabinet, we can actually store them right here under the vendor, under the attachments. So my recommendation here is any supporting documentation, if you have an application that you utilize to bring on your vendors, or you have some kind of a documentation, this is an ideal place to both store that and the W-9 since it's secure. If you store your W-9s anywhere else, they should be under lock and key. Any questions around vendors or independent contractors while we're in the expense portion of this? Oh, you guys are gonna make this easy on me. Okay, nothing under expenses. Let's talk about the payroll module real quick. So I'm a big fan of the payroll module. And the reason I'm a big fan of a payroll module is I actually used to run payroll for a company. And it's a pain in the butt. You spend a lot of time doing a lot of work, ensuring that none of that liability lays with you. And so most businesses that are in the small to mid market, I actually highly recommend if you have more than 3 employees utilizing QuickBooks Payroll. It's seamless, it integrates so well. They assume all the tax liability associated with your reporting. And it's simply a matter of ensuring that you have your employees set up correctly and that you have their necessary W-2s on file. And QuickBooks actually does a really good job. The expense associated is minimal against the returns and the time and the effort that goes into running payroll, in my opinion. And this is an area that can really be a pain point for companies as they start to grow and just dealing with payroll as a whole. Question?
Is that an extra added
It is.
feature?
It
And
is.
how many, will you comment on an extra added feature if you're talking about something that's extra?
I will.
Like payroll and maybe budget and taxes or anything that is an extra
Sure.
added thing that's
Sure.
not standard to QuickBooks Online.
Absolutely. So right now, the payroll module is the only additional module on. The tax reporting and accruals can be done automatically within QuickBooks. They will not do your tax reporting, but they will do the accruals if they're set up correctly, so that when you do go to the BOE or you do go to the IRS, it's simply a matter of plugging the number against what you're seeing in the system. With that said, the payroll module is an additional module. It's a set cost. I believe it's $45, and then it's per employee set cost, and that cost is structured up based on how many employees you have. Again, depending on the size of your business, I highly recommend if you're 3 to 5 that you strongly consider using the payroll module. The amount of time and effort that it saves you in utilizing the payroll module as a whole, I think more than overcomes the cost associated with it. The other part is when you're dealing with multiple individuals and everyone's different, and some people have multiples of things like, childcare and things that deductions that they want taken care of within payroll, for you to have to go through each individual and spend the time and the effort to do it, in my opinion, it's just not justified if you're trying to run a business at the same time. Now, if you're small enough and it's something that you're comfortable doing and you have the expertise, great. But again, if a big part of growing your business is focusing your time and the energy in the areas that your business needs you to focus. And in my opinion, payroll is not a big one of those. Growing my business, taking care of my customer, make sure those are the areas that I really want to be focusing. I don't want to be spending a day or week focusing on payroll. And I speak from someone that spent 2 days a week, every week working on payroll. And that's with using the module as well. Again, I had almost 1,000 employees that I was working with. So from a scaling perspective, slightly different. But again, the point I'm trying to make here is QuickBooks has the ability to handle that with you without any issues whatsoever. It also can deal with things like liens and tax requirements that the IRS might have that you get pushed through. I mean, I hate to say this, but employees encounter certain situations in life that you have to be able to resolve or address. QuickBooks has the ability to do that. If you have someone that has things like alimony payments and things like that, and you get a court order, QuickBooks Payroll can handle all of these things without you going, oh my gosh, how do I deal with this? Again, great resource. You can reach out to them. They're always available. One of the things I really like about QuickBooks is the 2 features that draw me to QuickBooks the most that make me recommend it to you, to individuals like yourself, are number 1, the database that's available for QuickBooks is massive. There is not when I come up with a question in QuickBooks, and I will show you the page, you can go to QuickBooks online and do their search question knowledge base. It'll answer any question you have. And the part that I find interesting, being someone that's done this for a really long time, there's never a question that I have asked that 25 other people haven't already asked. And so to get other people's perspective on how they approached this subject or how they dealt with this issue is key, right? Because sometimes we feel like we're on an island, we're the only ones that are dealing with this. And then all of a sudden I type in this question, it's like, oh, okay, everyone else is dealing with the same problem. It's a great resource from a knowledge-based perspective as you're starting to learn and grow with QuickBooks. That's number one. Number two, and the part that I really appreciate, you have a real problem. I mean, like you have a real problem. You pick up the phone, you get a person. You don't get a person in India. You don't get a person in Australia. You get a person here, right? That you're talking to on the West Coast in particular. You're on the East Coast, you're going to get someone that you're talking to on the East Coast. It makes a difference, right? When you're trying to get something done, you're running your business, you got 1,000 things going on, and you need to get on the phone to solve an issue, you're going to get a customer representative on the phone that's going to work with you. Now, can these things be painful? Can they take time? Yes, they can, but you're dealing with a person. And that makes a huge difference when it comes to dealing with issues and problems out there. And I'm a big believer in the customer service side of QuickBooks as a whole. One of the things I take great pride in is I'm actually a pro advisor for QuickBooks. So I get certified every year on all their products. They're constantly asking me for feedback and interaction with clients like yourselves. And one of the areas that I've always emphasized is the customer service side of things, because that's actually what will bring a customer back. If the product works, it's actually the customer service side of the thing that really keeps people engaged and keeps them bringing back. Because there are a number of other competitive products here that do a lot of what we're talking about today. They don't just do them all as well as QuickBooks does, right? And again, I just like to emphasize the ability to chat with someone live. I mean, right now, if I wanted to, I could simply click on this chat live and I would have a representative that I'd be talking to. If we needed to continue that conversation, I could pick up the phone and call that individual. Great resource. I mean, like really great resource. But payroll module is an initial add-on cost. That's how they generate their revenue side of things. But again, based on what I've experienced, it is well worth the time. Okay, let's touch on, I'm going to go down to taxes and talk about it really quickly so I did talk about the fact that I don't like to dive too far into taxes with QuickBooks because it's very specific to your business. Again, after this session today, I'm more than willing to sit down with anybody that needs to sit down to go a deeper dive into the QuickBooks, but I do want to talk about how taxes work within QuickBooks and what it looks like, because this is another area from a reporting perspective that QuickBooks does an amazing job. So every time we sell a physical product to someone, there's a tax accrual that's generated against it. What does that mean? Well, taxes are charged and accrued for in QuickBooks within the chart of accounts. And the way these taxes are calculated, just to give you some knowledge behind it, is basically it looks at the zip code to create the nexus of where you're doing business. And the way our taxes are calculated is they're calculated at 3 different levels. So you have your city tax, which is normally between 0.5% and 0.75%. Then you have the county tax, which is normally between 2 and 3%. And then you have the state tax, which is normally between 4 and 4.5%. That is what makes up your state taxes as a whole, right? And what drives that state tax number is actually your zip code. And so when you generate an invoice for a customer, see if I can bring one up. What the system does is it looks at your zip code, it looks at their zip code, and then it will create a tax accrual at the bottom to show you. Don't want to do that. It will actually set up a tax accrual at the bottom for you to track your sales tax against. And that is a physical line item within the chart of accounts that you're able to track against. Here's the key aspect. Each state needs to be set up. So if I'm doing business in California, then I need to set up California. If I'm doing business in California in SLO County, I need to set up the business in California and in SLO County. And what will start to happen is it will create the tax accrual entries against the different counties that you're doing business in. And the only reference point that it will use will be the zip code that it's being associated with. So it does a great job of breaking out exactly by state, by county, what the reporting liability is from a tax perspective, if it is set up correctly. The nice part about QuickBooks these days, this is something that used to be a pain for me, is 5 years ago, you would have to manually go in every 3 months and update those tax codes. System had no way to automatically do it. So in my case, I was running 33 different states. Within each of those states that we were operating 3 to 4 different counties. So you're constantly going back to ensure that you have the correct tax rates within QuickBooks. You no longer need to worry about that. Every time you run an invoice, it actually pings the post office, it pulls in the tax rate from the United States Postal Services, and that's what creates your tax accrual in here. Why? At the end of a quarter, then, when you go to do your filing with your BOE or utilize your CPA, you can generate one report that goes to your CPA to do your quarterly filing, or you can go into the BOE and do the filing yourself because the breakdown is right there, clear as day. And it doesn't matter where you're doing business within the United States, as long as you are registered in that state. Key point, just to be really clear, if you do business in another state, you need to be registered in that state to do business, okay? Because when it comes time to file taxes, they're going to know what states you worked in and what states you're registered in. So really key aspect of this as well. Again, when you're registering a state, you should be setting that state up within the chart of accounts to track the tax liability against it. That is all I'm going to touch on as it relates to taxes. If you want to have a further conversation with me about taxes, I love talking about taxes. I'm weird like that. I'd love to set an appointment and sit down with you. But again, it's very specific to your business, your service. So as an example, it'd be very different from someone selling a product.
We sell a product also.
But I love it. And we can set up both. You can actually track both in here. You would just set them up as two separate line items, one being a service that's non-taxable, one being a product that's taxable. So we literally can actually set up within the item list, the products that you're selling, and have the system then calculate out what that tax accrual is for your business. Do you do markups on the products?
Yes.
Okay, so the system actually has the ability to track that for you and calculate out your margins as well.
That'd be awesome. But we also buy a product in euros
Okay, not a problem.
and then we bring it here and then we, mark it up in dollars,
Mhm.
plus adding on the customs.
The import
and
tax duties,
delivery
Mhm.
into that
Yep.
markup.
as you should.
Yeah, and then the euro markup also.
So the euro markup is where you struggle the most because the conversion rate shifts every day.
It's not a lot.
It's not a lot. No, I do agree. So I used to work for a winery, a local winery here who used to import and export from Europe. And so similar situation. So, well, and I will share with you how the issues that we had and then how we addressed them. So our issue was we would bill in dollars. They would pay us in euros. They would always wait till the euro was up and the dollar was down to pay us. So though they paid us in full, we would always be underpaid
Yeah.
in the manner it's coming in. And this is one of the issues you have. QuickBooks can bill in euros if you wanted to. That's the nice part about it. It actually has the ability to bill in euros. And then when the payment comes in, you can convert it over. Again, this puts you in charge of dealing with the conversion rate and deciding when you want to convert it. That's one instrument that you have that you can utilize. The other one is you can bill in dollars and force your customer to pay in dollars too. The vendor or the customer to pay in dollars too. They will convert. It's just the onus has to be on them, not on you. And most people don't realize that they can do that to facilitate that transaction as a whole. Now, the next question becomes, how are you including all the import duties associated with the cost of bringing that product out and then the markup associated? Because they're actually all tied back to the overall margin that's associated with what you're selling that product at. So we can go in a little bit deeper if you want to sit down at a later date, but those are some of the tools that I encounter or some of the methodologies that I have used to address this issue as a whole. But yes, dealing with euros is absolutely something QuickBooks can do, and it's not a problem at all.
Can I just ask, I feel like I'm.
No, nobody else is raising. This is what I want. So
When you set up your QuickBooks,
Mhm.
do you have to state right away whether you're gonna be cash or accrual? And what is the difference and what?
sure, great question. So first of all, you want to start off with cash. Okay, cash is the simplest methodology, and what does that mean? It's exactly what it says it means. What you have coming in and what you're reflective of in QuickBooks is the same, right? I've got 20,000 at the bank. There's 20,000 in QuickBooks. I'm paying my bills. What's an accrual? An accrual is an accounting for a liability that is in the future. And the area that it comes up most specifically is payroll, right? So a lot of the time when we're closing out a month, the payroll will leap from one month to another while we're actually doing it. We need to be able to accrue for that liability before we move into the next month. And so we create an entry for what will happen in the future, as opposed to what we actually physically have on hand right now. That's the difference between cash and accrual. And to answer your question, you can switch at any time. In fact, the only time it really matters is when you're filing your taxes.
Well,
And so that's where this argument comes into, but having a clear methodology of whether you're using cash or accrual is important, because you can't have both.
So when you set it up,
Mhm.
you state it at that moment?
You
as
do,
well?
you
Okay.
do. So what happens, and actually I can show you as an example in here. Let's jump out and see if I can pull.
and how do you know which one you're on? Because I'm in my company.
So your
numbers, but
CPA is
I'm
gonna
not.
know, whoever your CPA is, that when they did your taxes last time, they're gonna base it on cash or accrual.
Does it say it?
No, it would not. It would be on your tax return,
Okay, got
right? So if I was to look in the profit and loss, and so my favorite report in QuickBooks, let's do. So you see up here in the right-hand corner?
Yes, it
Yes.
automatically populates.
It
But
automatic.
But you can choose.
Oh, you
to
can
look
choose?
At it another way. Okay,
Absolutely, you
understood.
can. You
Okay.
can. But I guess the core print, so you're trying to ask me, like, is there a button that I
Yeah,
said? No, there's not. No. So the accrual process is an internal process, but you're going to be working with your CPA specifically, and in turn deciding what methodology you're going to use. That's not something you're going to get from my side of the world. And again, it goes back to how you're managing cash flow, receiving payments, and how you want to report that. So early stage businesses tend to be cash. It's simpler. As companies grow and get more complex, that's when we start to use accruals, if that makes sense from an overall perspective. But I can go into deeper in that when we sit down
Yeah.
on how it interacts as a whole. Great question, though.
I think our QuickBooks is at least 10 years old.
Oh, wow.
So.
Okay.
I-
So I'm guessing you're probably on an
Yeah, I
accrual
think
basis.
so. And then we needed to answer the question from one of our vendors.
Mhm.
How much did you sell
Right.
last year? And so we pulled a report and it had X amount,
Mhm.
but they forgot to put in that it was paid in the next year.
And so that's an accrual.
Okay.
That's an exact example.
Like $7,000 is like, where is this?
Because you accrued for it, but then you didn't pay it out.
Exactly.
And so in that process of doing it, you crossed years,
Yes.
which shifted the liability
Okay.
from a tax reporting purpose. Because on the accrual side, right, for the year that it was done, the accrual, it was not paid out. Then we went into the following year, and when we did our tax reporting, we're going to be off by that $7,000. And in fact, what's going to happen is when you generate the 1099 for them that went out, they're going to be off by that $7,000. And that's what's going to create the red flag for them, because now they're understating their income. And this is how it impacts them from an overall, because you were paying them, right?
Right.
Right, but they never got the payment because you did the accrual, but not facilitate. And so
Missing $7,000.
$1,000, yes. And so that's how that happens, just to be clear. But that's also why it's really important that you stay on top of your accruals, because they affect your business from an overall perspective, month to month to month, right?
Okay.
And so it's a little unusual to use it for vendors unless there's a specific reason. Again, most of the time that I see it, I normally see it associated with payroll. We have these large payroll entries that overlap. So worked for a construction company, we have to pay people weekly. Running payroll weekly, I did a monthly accrual each time. I didn't physically do an entry every single week. I did a monthly accrual that I would post at the end of the month and then repeat the cycle again. A little bit more complex, but yes. Great question, though. Okay, so why we're here, why we're talking about the profit and loss, because I don't go too deep into this report on this session, but primarily this is kind of the overview of where your business is at, right? It's going to show you all your expenses, it's going to show your income, and it's going to show you your bottom line from your profit and loss perspective, right? And why is this so important for really early on businesses? And I'm just going to give everyone a great example. So I work with a ton of businesses that are 3 years and younger, let's say. And so you know what they don't want to do? They do not want to generate a profit. They don't. And you're like, Damon, why not? They want to be successful. Oh, no, they want to be successful. They just don't want to report a profit because they don't want to pay taxes. And the money that they are making, they want to take that money and put it back into the business. And this is where the profit and loss tells you the story. So like, as an example, I work with all these teams out here they're starting up their business, they come into my office on November and they sit down with me and they go, we got to start talking taxes for next year. And I'm like, okay, let's take a look at your profit and loss. And we look at their profit and loss and they're showing a $15,000 profit. And they're like, oh my God, we're gonna have to pay taxes on $15,000. And I'm like, no, we're not. We're gonna take that 15,000 and we're gonna invest it back into the company. We're gonna buy that piece of machinery that you needed. We're gonna lease that computer that you needed. We're gonna go do that marketing campaign before the end of the year and create that offset against that profit line that you have in there. We're gonna pay you guys, right? So that you get paid for the work done. There are so many creative ways that we can utilize the profit and loss to tell us where our business is at, what money we have, and what we need to do with it. But it also ties back to having a budget and having a business plan to know what we want to do when we have those assets and those funds available. Okay, so kind of dived a bit much into the profit and loss, but I'm a big fan. And one of the reasons that the setup and the chart of accounts and all the things that we've talked about today are so important is this report will not be accurate if that's the case. The other thing is, if you had run this profit and loss report, you would have put that accrual because it would have shown in here. And so when I reconcile my books every single month, I run this profit and loss report to tie it back once I've got the bank account tied out because it will show that accrual. And so it's simple little processes like this. And again, you could set this report to email to you once a month to remind you, let me look at the profit and loss to see if I can see that accrual in there. So it's simple little things like that that you can do. Yes.
Can you run a profit and loss with two lines showing last year at this time?
Yeah.
And this year at this time?
Yes, you just have to run them separately. So if you looked at the top left-hand corner here, I can do last year, and then I can just scroll all the way up here and then do this year.
Oh.
And then just do them as
Do it side by side.
no, you don't have the ability. So now you can pull both reports out and put them side by side. Yes. And then you can actually go back and change the range to be further than a year, and the system will generate a report, but it won't be side by side. It'll just be multiples, but you can do year over year comparisons then.
Because if you had it side by side, you could see that last year we generated $20,000 in sales at this time last year.
To compare.
This year we're only this, but you can't.
So not within the profit and loss you can, but you can do it within the general reporting management here. You could go into here and run a sales report and do a year over year. And so it's good. You actually kind of created a little pivot for me here because the next thing I did want to talk about is the report side of QuickBooks. So this is the area where I actually don't like QuickBooks Online and dearly, dearly miss QuickBooks Desktop because of all the things that QuickBooks Desktop does best. It's this customized reporting. Well, what do you mean by that? QuickBooks Online is amazing when it comes to reporting. One of the issues that I have is it does not have all the reports that the QuickBooks Desktop version used to have. And more importantly, it doesn't give me the ability to customize them at the same level that we did. With that said, you can most certainly go in and build a report out year over year to compare specific things like sales, like vendor interactions, these kinds of things that you want to leverage. And go back and we talked about terms with our vendors and things like that earlier on. This is a great way to do it. If I'm spending $50,000 with a vendor and he's not giving me terms, I'm calling him up going, you know what, I spent 50 grand with you last year. I want net 60 terms. Right away, I've managed my cash flow for scenario just by knowing what I'm interacting, who I'm interacting with. You do have the ability to go in here. Let's see what sales reports we have. So we can do sales by customer summary. We can do sales by customer type, and then we can break out the year. We can do month to date, year to date, or you can customize it. And so one of the things that I really like about the reporting module within QuickBooks as a whole is as you go through and search these reports out, you can save them and or customize them to your needs. And the nice part about it is that most of the time there's a number of reports in here that other people have modified. You have access to reports as well. So if you wanted to look at your sales tax payable, so taxes, let's say, right? We can simply stick on it. It's going to run that report for this year. And I don't have any information in here right now. But if we did those accruals that we talked about in regards to sales tax, this is where it would show. It would show how much is due and when it's due, per se. Other parts about the reporting module that I like is we've already talked about the accounts receivable. This is the report that I would run on a weekly basis to take a look at it. And you could project it out as far as you want. So if you have customers that you know are outstanding and need to collect on, you know, prospective, you have customers that have payments coming up, you can reach out to them. You can be proactive in dealing with them. This is also a great way to deal with customers that don't like to pay you. Okay, we all have them. Do you know how you get customers to pay you? You're proactive in dealing with them. You create rapport and relationships. You don't harass them. You don't send them multiple invoices, but you call them up and go, you've got a bill that's due in a week. Just want to let you know, is there anything I can do for you? When the bill is due, you call them up again, your bill's due today, just want to send you a copy. You can be proactive in dealing with clients that are difficult from a payment perspective. You can also threaten to shorten their terms if they don't. And it's a huge leverage points for the customers. Like, look, you've been late on payments for the last 3 months. Your terms are going to go from 30 down to 15. Okay. Nothing gets their attention quicker, just like it would do the same for you if you were on the other side of it. It's affecting their cash flow. Guess what they're going to do? They're going to pay you. Okay. And so just another tool that you can utilize to manage those relationships.
Another question. You said you can automate the report.
Mm-hmm.
Can you automate it to send somebody that report in an email that doesn't have access to the QuickBooks?
100%.
Like the president.
Yes.
He never looks at it. He
Nope.
has no idea.
Nope.
So you can automate the AR to go every 2 weeks
Right.
to their email address.
Correct.
Okay.
So I could have the AR go to you, I could have the AP come to me, and then I could have the president get our profit and loss report every month
Automated in an email.
in an email. So
Because
this,
they don't have access, they don't know how,
Nope,
they don't
nope,
look at it,
nope,
they don't want to.
nope. I'm not going to show you how to do that today, but when we sit down, I will show you. You can literally break it out. This person's email address, this report on this date, it generates, it automatically goes. And it's just a great tool because like when I come in on a Monday morning, I don't even need to think about it. It was just waiting for me right there in my, it was the top 2 line items. I jumped in, I ran my AR, my AP, I sent it off to my CFO. He reviewed it so that on Thursday I could run my AP, done. And so that was our cycle that we had internally where he was reviewing our cash flow. And then on Thursday, I was cutting checks / making payments out to our vendors. And it works great because then I have another set of eyes reviewing the work that I've done to ensure from a controls perspective, really important, guys, putting controls in place. You should not silo yourself. Like my position should not be the only position looking at these finances and running. You always want somebody else. Why? Controls. We're human. We make mistakes. It's important that we have processes in place to stop what happened with your $7,000 accrual. Because if we did what we just talked about, that would never have happened because one of you would have seen it. And so it's setting up these little, I mean, like what I'm talking about takes no time to do. And once it's in place, it's continuously there for you. But you have to know that you have access and that you can do these things before you can actually put those processes in place. So it's simple little things like that that can be done within QuickBooks that's just makes a huge difference in the way that QuickBooks operates. The other part that I'd like to touch on now that we've been talking about reporting, and I don't have this module in here, and this is an add-on module, but the inventory control system within QuickBooks is absolutely amazing. I ran a winery with 4 different locations, 27,000 bottles of wine we'd go through a month. And at the end of the month, I'd be off by a bottle or 2. Because our inventory control system is so good. And that's from the very beginning of the process. So from the PO side of things, right, all the way through to bottling, sending it out to the customer, sending it to the tasting rooms. The inventory control system that QuickBooks has is amazing. And if you don't know what inventory control system is, it's not just a matter of what do I have in stock. The example that I like to use in this situation, medicine must be so tired of hearing me tell this story, is putting wine bottles together, right? Bottling wine. So everyone thinks all I need is a bottle and the wine. No, you don't. You need the bottle, you need the label, you need the cork, and you need the stopper. And so what happens is I get Costco calling us and saying, we want 20,000 bottles of your wine. And I reach out to my floor manager and he's like, yeah, we've got 20,000 bottles worth of wine, but we need to bottle it. Well, I'm like, okay, that's great. And so I go into my inventory control system and I go, we want 20,000 bottles at 700. And all the system goes, well, you've got enough wine to bottle that, but you don't have enough corks. You don't have enough labels. And now my inventory system is telling me we can do 13,000 this week. Right away, my general manager's like, okay, we need to order more corks and more labels, right? So now I can go back to my customer and say, you know what, you're 20,000, I'll get you your 13,000 this week. My order's on hand. I'll have the balance of 7,000 next week. These are the kind of things that the inventory control systems can do, because most people think it's like a store with a shelf. It is not, right? Let me break it down even further for you and give you a better example. We have a company that came through here, and this was one of their major pain points, called NeoCharge. They build an adapter that charges Teslas, and it plugs into your garage. It costs like a tenth of what Tesla charges for you. But they had all these components that went into this little box to make it, right? And so they'd get an order from someone that they want 50 of these boxes, right? And so they go to plug it into the system and start putting them together and realize, crap, we only have enough components to make 40 of them. Oh my God, how we get, I'm sorry, I can only get 40 out, and they're coming from China, so it's going to be another inventory control, right? Understanding what I have on hand to fill the orders on hand, even from a component perspective. So they had like 42 different components that went into manufacturing that one product. But unless they had all 42 of them, they couldn't fill those orders. This is what I mean by inventory control. So whether we're talking about something as simple as that, or as complex as running a winery where you're dealing with multiple tasting rooms, people coming in every weekend and buying all different types, this is where your inventory system plays a huge part. The other part that inventory system does for you that most people aren't conscious of is it tells you what people like about what you sell. Because guess what? When you go into those tasting rooms and then you come back in on Monday, and I look at the report from an inventory control perspective, I can tell that I sell 3 times more white wine than I do red wine. So next year, when I'm planning for our harvest, am I going to make the same amount of red wine and the same amount of white wine? No, I am not. Because I know what the inventory system is telling me is that we tend to sell this product 3 times more than we sell this product. This product is also more profitable for us. So I'm going to want to sell more of this product. So when we talk about the next harvest and the next wine that we're going to do, we can plan around that from that perspective. Go right ahead.
So not only do you have bottles, you have red wine bottles and white wine bottles, and then you have to have the value of the red wine and the white wine.
Correct.
And then you have to have the labels for the red wine and the white wine and the Pinot and this and that. So
100%.
and the value of each.
And the value
so
and the margins on each, because the margins on each are going to each different bottle has different margins. Like my Pinot has to age longer. So that's why Pinot costs more than a Chardonnay, because Chardonnay is, and the cost of putting that bottle together is more. The glass for a red wine bottle costs more than the glass for a white wine bottle.
Right. So QuickBooks can keep track of the value of the empty bottle and the label and the cork and the stuff and the
Yes.
plant,
Yep.
whatever you call it.
Yes, it
And then
can.
you can keep track of the value of the total of those?
100%. 100%. And let me show you how it does it, because like in your mind out, you're like, wow, how does it do that? I mean, like, that's awesome. It's actually quite simple. Can you see the board, Madison? And actually, it's why I like explaining it in this manner. So here's the tough part about what we talked about. It takes work to set this up, okay? Because here's what we do. So let's go red, let's go white, okay? So for all, let's say we have 3 different types of red. 1, 2, 3. So 3 different types of bottles, right? Labels, just labels, and let's say cork, right? And then the same, right? And each one of these is listed as an item within QuickBooks. So let's just take the red. So the red bottle, I buy my red bottle for $1, right? And the label costs me 25 cents. And the cork costs me $1 again, right? And then the bottle cost me, let's say, $3, right? This is your COGS, cost of goods, right? Right here. All right, so we've got 1, 2, 5, so $5.25. Just to put that bottle together, just for this bottle of Pinot, right? And then I do the same on the white. Empty.
Right.
100%. But now I know that my cost before I put the wine in there for that bottle is $5. On the white side, that same thing might be 50 cents. The cork is probably the same price. The bottle is where I'm going to save the money because it's significantly cheaper. And so now my COGS on this white bottle of wine It's only $1.75. Right? And this is where I talk about what I talked about earlier. I sell 3 times more of this than I do of this. My margins on which one are going to be higher? Right here. I can sell this bottle of wine for $30. I can sell this bottle of wine for $50, right? But my margin on this one is greater. And we do this for every bottle that we have. So if we have 13 different types of wines, each one of them is structured in this way in the system, and that's the time-consuming part. And then when I go deal with another vendor, because I'm buying my corks from one guy, I'm buying my labels from another guy, I'm buying my bottles, this is it, right? And so when I get 1,000 bottles in for my white wine, and it costs me $3,800, I know right away that the system knows, well, you paid $3.80 for that bottle.
And then, so when you have your invoices for your sales, it automatically knows that.
To reduce the,
To reduce that amount of inventory.
Not only does it know to reduce the inventory, it knows to reduce the inventory at the specific location. Because so, I mean, I worked with Sexton Winery. We had Edna Valley, we had one up in Paso, we have a tasting room in Lompoc. And so we'd have a big event at Edna and know the inventory wasn't there, but we had plenty up in Paso and plenty in Lompoc, so we could pull from the inventory in there into Edna. And the system will know exactly how much is there, here, and over there.
And QuickBooks knows.
QuickBooks knows it. And so that's the nice part about QuickBooks from that perspective, is I could come in on a Monday morning and see how the weekend went. Wineries, weekends are the biggest time. I could see, yeah, we had X amount here, X amount here, and plan for the following week, both from a planning and bottling perspective, but also from an inventory perspective. Like if my winery up in Paso was running low, I could pull from the Lompoc one or the Edna one because I knew exactly what was on hand. The only part about this that gets tricky is that you do need to do inventory once a month, like physical inventory. So as good as the system was, one of my mandates was once a month, last day of the month, I'd send my inventory manager out to all 3 locations, and all he did all day was count boxes, count bottles, because you do have to do inventory adjustments against it. Look, we're human. Somebody dropped a bottle. Somebody put a bill. I mean, like I said, I dealt with 25 to 27,000 bottles a month. If I was off by 1 or 2, it's like, okay, we're doing a good job. It's when you're off by, like, when I first started there, we would average about 14 cases a month that we were off. And I'm like, okay, there's something going on. It's making its way where it shouldn't be. It's those kinds of things. And that's when it starts to affect things like your margins and your profit line and things like that. So again, a big part of this is having control and understanding of what is taking place with your business, where your business is at, which in turn gives you the ability to focus on growing your business moving forward. Big fan of this, really big fan. If you have a lot of products that you're dealing with and you need an inventory control system, I highly, highly rate the QuickBooks. With that said, as I said in the beginning, it is an add-on module for QuickBooks per se. Okay, the last subject that I want to touch on today is projects. And the reason I bring up projects is QuickBooks is kind of unique in that it has the ability to track specific projects. So this relates more to companies and businesses that are either in construction or service sides of things that have, this might relate to you in somewhere where they want to be able to track the total cost of doing business with that entity at a more granular level. So as an example, if I had a specific client out there, let's just say I was working with, I don't know, Chevron locally, and at one of their specific locations we had a contract with, I could create a project around that contract that I could track every single expense that hit there, whether it be labor, whether it be expenses associated with products and services. I would be able to do that. And the reason that that's important is a lot of contracts out there that relate to what I just talked about are cost plus projects, right? So a lot of federal and state projects that you negotiate out there, they're associated, and I'm not talking to everyone, which is why I'm going to keep this really brief, but long story short, QuickBooks does an amazing job of tracking that expenses at that granular detail. So in my case, when I was working with REC, we did a lot of the VAs, right? VA projects tend to be cost plus 10%. So the VA is like, we will pay you 10% above whatever it costs you to buy that. And so I literally would have to use the project module to track every single expense, mark it up by 10%, and then bill them in that way. It is really hard to do that unless you have the ability to generate a specific project, because all your other expenses are commingled in where? In your chart of accounts, right? And so if I was to look at it at a granular detail, I could see everything, but it would be specific to that customer per se, because not all my customers would be cost plus. Most of my customers out there would be a project plus our margins built into it. We would negotiate and they would sign a contract with us. Don't want to spend too much time here, but knowing that that QuickBooks has the ability to manage both state and federal is kind of what I really want to emphasize here. I know not everyone does it, but if you deal with things like the city, if you deal with anything to do with the state, the ability to track it at this level is key for them to want to work with you, and QuickBooks has the ability to do that. Okay, well, managed to fly by that in 90 minutes, a whole lot quicker than I thought. So I want to open it up to just general questions in regards to this. I don't want to go too far down any other area, but if there's a specific subject, a topic that anyone would like me to address now, or if you have any further questions associated with what I went through today, please let me know. Also know, though I spent very little time inside the actual learning module, I will be sending this out today to everyone. It will go over pretty much every single thing that I spoke about to a T. I've been doing this for a while now, so I have it down pretty good. It will walk you through the invoice process, it will walk you through the chart of accounts, and actually this leads directly into my next intermediate class as well. So if you just want to get up to speed on what the next steps look like in QuickBooks, this training module will have it, this training guide, excuse me, will have this in there as well. I will be sending this out after this meeting. If at that point in time you guys like to schedule a follow-up meeting, please don't hesitate. I can do it via Zoom, or I can meet you here in the hot house. But right now I'd like to open it up to general questions and feedback, if I could have some in regards to the session today, what you would like to see more of, less of, and just some general feedback. Oh my goodness, can you make it that easy on me? Nothing out there? No?
I'm
Well,
monopolizing everything.
no, you're not monopoly. I mean, this is what I really do enjoy when it's interactive and I'm not just sitting here going through slides. To be honest with you, I don't find it to be as engaging or as effective. I'm very much about a learn by doing individual. So even when you meet with me, we're actually going to be inside QuickBooks doing this. I mean, like, I'm going to stop sharing for a second. If I was to sit here and just scroll through this study guide with you guys, right? And walk your way through all these things right here, they just wouldn't mean as much to you as me being in QuickBooks and actually showing you what it's going to do for you. The other part is you want to get comfortable operating inside QuickBooks, right? I mean, all the things that I've talked about today actually all come together in some form or manner to create a bigger picture, which is the financial clarity of where your business is at this exact point in time. And that's what QuickBooks does for you. But again, like I stated in the beginning, it has to be set up correctly. You have to be diligent on doing your part to ensure that it's set up correctly and that you're reconciling. And so that's actually the last thing that I want to leave you with today is we did talk really, really briefly about reconciling. Let's just touch on that as my last subject matter, because most people are so very intimidated by this word. And honestly, it's the easiest thing in the world when it comes to QuickBooks. And so I just want to talk through what it actually means. Let me share my other screen with everybody. What it means to reconcile. So really intimidating word, but at its core, it means that we're tying back the balance in QuickBooks to the balance at your bank, right? And it's simply a matter of bringing up your bank account up here, typing in the ending statement balance. So when you look at your bank statement, the very front page has two pieces of information. It has the ending date and it has the ending balance. All you need to do is punch those two in here. The system then goes and pulls that data over. And because we use the one source of truth method where everything's hitting the bank, they should always tie. Well, guess what? They're not going to tie, right? Because we've had lots of transactions. But the nice part is the system will say, I've got this sitting at the bank, but I don't see it in QuickBooks. And you can go, oh, well, that should be in QuickBooks. That's an expense. Done. And then at the end, you zero out. You tie out perfectly, and you repeat, and you repeat, and you repeat. And that's where you would have put the tax, your accrual too. So both methods would have captured it. The reporting on the profit and loss would have caught it, and on the reconciling would have caught it as well, because you would not have tied back on that accrual as well. So just another tool that you can utilize to keep yourself on top of the financial activity of your business and where you're at financially. And so to be clear, a lot of what I do, and I'm not even lying when I say this, I actually spend a lot of my time meeting with clients and teaching them how to reconcile because they're so very intimidated by doing it. Here's what I will tell everyone out there. I do it one time with somebody. It takes me 15 to 20 minutes and you are gone. You get it. You understand it because QuickBooks does such a great job of simplifying it and making it really, really easy to use. Perfect. Well timed.
I have my business in daycare.
Yep.
Would like to learn how, how to know what are my expenses and my income.
Ooh, okay.
But also for my personal expenses where I'm spending more, can you explain a little or give an example on this?
Sure. Okay. Well, I actually have quite a bit of knowledge when it comes to this. So when it comes to running a daycare out of your house, you are actually running a business as a sole prop, a sole proprietor, right? As such, you get to claim anything associated with the operation of your business in your house along those lines. So let me expand on that a little bit. Let's say you have a 3-bedroom house and you're using one of those bedrooms or one of your rooms to run the daycare out of. You're able to claim that space as a business expense. So you have 1,000, let's just use 1,000 square foot and the room that you're utilizing is 200 square feet. 200 square foot, you are allowed to claim as an expense against the business. You're allowed to claim the insurance on your house at that percentage against it. You're allowed to claim everything associated with operating that business out of your house that is directly associated with running the daycare. So that goes to things like cleaning materials, food for the children, toys, safety equipment, electricity, right? All these things can be claimed as a percentage of your total, including property taxes, insurance on your car. Do you pick up the kids and drive them to school, right? Well, a percentage of that can be claimed against the business. The key aspect from your side is exactly what QuickBooks is designed for. You need to segregate out the personal and the business side so that you can track it effectively. And here's the recommendation that I make to most individuals at your level that you're trying to do this with. I would highly recommend that you create a separate checking account, right? And this second checking account is solely tied to the business. One source of truth, like I put up on the board. Anytime you're spending anything associated with the business, right? So you're going to the store to buy supplies and materials or diapers or food, use the business card. When you're doing something related to the personal side, you swipe the personal card. Those business transactions then show up the next day in QuickBooks, and you can simply categorize them to what they are related to your business. And that's the way to start tracking and segregating the personal and business side of your business as it relates to you being at home and running a daycare. The other advantage to this is you can clearly see which side of your business, or more importantly, which side of the personal and business side the expenses are hitting at. And so it's a simple methodology that you can use to go ahead and track those expenses on a weekly, monthly basis per se. You can then tie it back to your bank account and reconcile those as well. Great question, though. Yeah.
Thanks.
And again, if you want to sit down and have a further conversation, my ex-wife used to run a daycare. I have tons of experience working with daycares. So if, again, I would be more than willing to meet and sit down and help you out any way I could. Any other questions out there? I do enjoy this part of it. So please bring them on if you have them.
What's my experts? At the top.
So my expert is just that we actually talked about this earlier. You can bring it up and talk to them directly as a consulting line item within here. They will answer general questions for you. If you go anything specific, they will attempt to push you down to a consultant and start charging you, et cetera, et cetera. But you can ask general questions from here directly to anyone. So, and most of these individuals are actually pro advisors as well that you're dealing with, which is nice. Again, I'm a QuickBooks consultant for the SBDC. They're a fantastic resource located in here at the Hot House. completely free of charge. We run a number of grants here to support our local community. I'm going to do my whole local community session right now. Small businesses are the lifeblood of our community. We live in a little slice of paradise, at least I like to think so. The reason that we are here today is to support businesses like yours because you are the lifeblood of our small community. And we see so much value. We're supported by the state, we're supported by the county, and we're supported by the city, and we're supported by Cal Poly. And we are here as a resource for you guys. So please utilize us. And I genuinely mean that. Come down, check out the house, see what services we have to provide. Please check out the SBDC. They have an amazing program with over 42 consultants that work in every field you can imagine, and they're a resource here for our community. So that's kind of my spiel and that's why I do this, because I believe it's really important to give back to those community members out there that support our community. That's all I got. Any more questions, comments? I do like feedback. I will send out the email that I referenced with the study guide. I would really appreciate feedback. Did you like this session? Would you like to see me interact more with QuickBooks, more focus on the study guide? I've been doing this a while, but the only way I can get better at this is if I do get your feedback of what you need from this experience each time. Again, I will have my intermediate class coming up in the next couple of months, and then I will have my tax reporting class towards the end of the year.